everyone, this is Claire, and today I'll be sharing how not to make a costly mistake in terms of looking at buying a property, right? So over the past 3 to 4 years, you've seen, or even 5 years, all the way from COVID period, you've seen your neighbors have making easily another 500k or 1 million profit on their property. And then maybe you're wondering why like yours, in terms of returns on investment, is a little bit lower, right? Today I'm going to kind of point out what are the different factors you can look at in making sure that your next move will be a right one, and making sure that with the kind of holding power that you are using to leverage on property, you should be able to get the amount of profits that you want to achieve, okay? So looking back at history, right, I think there are a couple of factors here. One, how the right layout will help you exit faster and with more profit, okay? How the right entry price can help you secure some cushion for profits as well. And also, sometimes it's also a little bit about timing when you enter, right? For example, if you buy a new launch today, right, and at the start, the developer priced it at 1,008 per square foot, for example, right, then the remaining units, once they kind of gain confidence that the units are selling well, because you're buying something that is maybe of a lesser premium in terms of facing, or the price has really gone up because you're buying a super high floor, for example, right? So all these things will also determine how much profit you get at the end of the day in terms of like looking at your gross profit, excluding all the costs, right? Just looking at your entry price versus how much you sell at the end of the day, okay? But more importantly, how to pick the right one out of the lot, especially if you're looking to enter whether the resale market or the new market this year. So here's an example of how a right layout would help you draw the correct crowd of buyers into the market, so that you know that at least you as a buyer, you love it, you buy into it, right? Maybe you stay for a while, especially for bigger bedrooms, right? Maybe you're buying for own stay, and you know that your next buyer, as compared to the other surrounding properties, will also appreciate that kind of layout and be willing to pay more for it. So this is Park Rivera versus Whistler Glen. They are in the West Coast area and they are kind of almost side by side to each other, okay? So this is Park Rivera. Once you come in, right, it's a fully enclosed kitchen over here, but because there's a long wall over here from your door, you don't actually get to kind of experience the space that much. You do get a long living dining area, but this entire space is totally wasted. In terms of bathroom, I think they're still quite okay. Normal size master bedroom, 1, 2, 3, about 3 bedrooms and 2 bathrooms, right? You get a store and a WC, preferably for maybe a helper as well. Then you look at Whistler Glen, right? In terms of layout efficiency wise, there's a lot of difference, even though they are almost of the same size, okay? Once you step in, yes, there's a little foyer area over here, but once you step in, there is the wall is only this short. Once you go in, you see that there's actually a very wide living and dining area, and because of the dry kitchen, you in terms of hosting guests in your house, right, they can actually occupy like a lot of this space over on this side. But if for this case, you can only kind of occupy this side. So the feeling wise, once you step into the unit, the emotional feeling is totally different, especially if you're buying for own stay. And for Park Rivera and Whistler Glen, you see that a lot of people, especially for the 3 bed, 4 bed, 5 bedrooms, they're all buying for own stay. So the feel good feeling must be good, and also a little bit more luxurious and to cater for helper as well. So here in the master bedroom, the difference is that there's a walk-in wardrobe and the 3 bath, 2 bedrooms, and the bathrooms are okay in terms of the sizing. But the main difference here is really the dry kitchen and towards the living dining area. So you see these 2 layouts, practically speaking, they are both 4 bedrooms, but you can imagine when you enter into these 2 layouts, you see that the profit difference is significantly different, right? So for Park Rivera, for maybe 6 years holding period, they earn about 500k, and for Whistler Glen, you see that the difference is quite significant. It's almost 300k kind of difference from the lowest to the highest over here. So when you see the properties like that, we also need to understand for 4 bedroom buyers, for example in the OCR region, if let's say today you're looking at Alta, right, you want to be able to compare Cremant Canopy and also Clavon's sizing, and to make sure that which one you know that will draw people in more, right? So for example, these 3 projects, if you look at Alta and Clavon's actually the bigger layouts are actually very good. So as compared to the Alta one, I believe the Clavon one will draw a bit more in terms of profits as well, also because their entry price is slightly lower, right? So that would draw some profits. But in this case, Park Rivera actually entered at about, I think, 1,002 per square foot, and then this one actually entered at about 1,005 per square foot, or 1,004, that range, okay? But yet, even though the higher entry price, they actually exited with more profit. Also talking about another example, right? This is the Crest and Principal Garden. They are both 4 bedroom units, and then you see actually they're both side by side to each other. Walking distance from Redhill or Tiong Bahru is right kind of in between. But you look at the vast difference between the 2 particular layouts and also the 2 profitability, right? So you see the Crest, they have balconies on this door. The room is entirely odd shaped. This room is also entirely odd shaped. They got a small balcony in the master bedroom. The kitchen is ridiculously small. For a 4-bedroom, it's really very small. And then they try to squeeze in the utility and the yard in there as well. In the living dining area, it feels like a normal kind of like 2-bedroom living dining area. So coming into this area, looking at 4 bedrooms, people are also looking at luxury and looking for own stay, right? So you can see a vast difference between the Crest and Principal Gardens, where once you're coming from a private lift lobby, this one also has a private lift lobby at the Crest, but for Principal Garden, once you come in private lift lobby, you get a wide living dining area over here. You get a dry kitchen where you can host as well. You got a full-size kitchen, utility, yard, WC as well. So then the 4 bedrooms are also very regularly sized, and there is also like a semi-walk-in wardrobe. So you see that in this area, especially, people are less budget constrained looking at 4 bedrooms here. Then definitely anybody will want to choose Principal Gardens to live in instead. So you see the Crest, for me to enter at such a high quantum in the area, but yet I can still lose and I don't even cover my stamp duty. I think that's a major flag in terms of choosing the wrong layout. So you see this, in this case, Principal Garden, they actually make about 1 point something profit easily. That's a significant difference in terms of like looking at the same entry price, it's almost the same holding period, but yet one would lose a lot and two would have another head start of another 1.2 million dollars in profits already. Then once you exit, you can easily cash out 3 million plus, right? So that is quite significant if you're looking purely for investment and you're looking for buying your next move, right? This is especially important. Okay, the other thing I talked about when I was talking about Park Rivera and Mr. Grand was also being able to enter at the right entry price, right? For example, if Park Rivera had launched at that point in time about 1,200 per square foot and you had entered, right, along the way the prices would have gone up a little bit. High floor units or less favorable units may sell at a more expensive price, right? So if you see today this example here, Treasure at Tampines, they launched in 2019. People who entered at that point of time, they bought a 2-bed 2-bath 678 square feet at about 800 plus K. Subsequently, when the inventory started getting sold, the developers gained more confidence, they started increasing the price, and the PSF went up to about 2003, 2004, and then up to almost 2007, right? So in this case, for a 2-year time frame, for maybe a same floor area, for a less favorable stack, people were entering at about 1.1 million. So in this case, this is exactly what the people here exited at. They exited at about 1.18 million and they gained about 300k profit. But these people, right, once they want to exit in 2024, right, which is last year, they will not have made so much profit because at the point of time, the market was only selling slightly higher than this one. So the people who entered at first phase would benefit the most. But how do you choose the right timing and when do you enter at the first phase is most important. So different projects have different kind of phase that you look at, right? So another example would be for this Martin Modern case. So Martin Modern launched in 2017. It's somewhere in the River Valley area. 2-bedroom, 850 square feet. They launched at about 2.05 million. Okay, let's take it as 2 million. Then exactly 1 year later, for a 1 floor level higher, the developers actually sold the unit and somebody actually bought it at more than 400k difference. So the gap is significant. That's why in terms of looking at right entry and right timing, I think it's even so more important to make sure that you know that at this point of time when you enter, it's the best timing possible, but it's not that easy to spot, right? So there are developments in what I can call Perfect 10, one Pearl Bank, one Burnham, for example, right? These are the city projects that in terms of sizing, in terms of looking at demand, they may not be that strong. So developers price the price thinking that they can sell at that point of time. For example, for Perfect 10, I think they did at 3,003 per square foot, right? And then the unit stopped moving because nobody could accept that kind of pricing. Then the developers suddenly drop price, then drop again. So the people entering at 3,003 are kind of screwed in a sense, right? Because then how much am I going to exit when all my neighbors are already buying at 2008, 2009, right? So especially in the city area or looking at any properties in Singapore, I think it's very important to understand where the supply is and if there is enough demand coming in. If there's enough demand coming in, then we know that the developer will have confidence to be able to increase the price over time. Then your first phase timing will be the most important, right? But if the project, you may have doubts about a particular layout, particular location, or the demand pool coming in, then it's important to know that maybe holding for a while to just look at where the units are moving will make more sense for you, right? So this is another example, Martin Modern. The people who entered at the first phase in 2017 during the launch, they actually made the most because the graph was something like this. So Martin Modern, they launched really, then after the price significantly went up, then it hovered around. Then after, the people in the resale market also managed to earn a little bit, but those who actually entered at this range is benefited the most. So this is where the people here entered at 2,000 per square foot, 3-bedroom, actually make about 700 easily, right? 700k profit over here. So what I need to do is, because I know that this is 2.9, it's already been done 1 year later, when I want to sell in 2020 after my SST, I know that I just need to sell at their price and then I'm good to go already. I'm good to exit because this kind of profit is quite significant for a 3-year period, right? So knowing that when is the right time and knowing the developer's price strategies, it's also important to understand if you're getting the best deal out there. So today, if you want to make the right choice again, how do you choose? Or you want to make the same good decision again that you did over the COVID period, how do you choose, right? So understanding price gaps and also understanding per square foot differences are important, especially if you're buying new launches where you have quite a lot of transparency with the prices. If you're going for a resale project, you will also know, URA has publicly available transactions that you can look at where you can kind of track the patterns of the pricing, right? Is there a particular premium facing for that particular project? And all these different factors come into play on how you want to be able to maximize your profit, right? Or is paying that little bit of premium worth it? So in this case, what we want to kind of lay out in terms of concept is, one, this is a harmonized project, right? So this is Ori. The 3 bedrooms are at 1044 square feet and there's a 3-bed dual key at 1130 square feet. The 1044 square feet has been transacted and fully sold at 2.568 mil to 3 million. Today, the cheapest 1130 square feet 3-bedroom dual key is going at about 2.951 million, right? So if you look at the difference here, these are the transacted prices. This is what is asking right now for the remaining units over here. There is a difference of 84 square feet of space. So today, if let's say I compare apple to apple, right? 1044 at the highest 40th floor at 3.001 million, and about the price for the 1130 dual key unit is at 3.1 million. So it's additional 100k or 107k for 84 square feet more space, right? So if let's say you are looking at new launch today and you're looking between a 2-bed 2-bath and a 2+ study, for example, right? For maybe additional 32 square feet of space, right? How much premium are you paying, right? So the premium that you're paying extra, you divide by the difference of the square feet space, you will know that per square feet how much you're paying for the extra space and whether it's worth that premium to go for that or not. So in this case, for between these two particular layouts, 100k for 84 square feet more space, you're only paying 1,002 per square foot. But how do we see, right, that is this worth it or not? For Ori, their general per square foot was about lower floor 2005 all the way to about 2009 on the higher floors, and some of them are already asking 3 at this point in time. So if you're buying something that is the additional premium is more than the average pricing in the area, then it will be something that may not be worth the while. But if everyone is average transacting around 2,007 per square foot for Ori, right? But you're only paying 1,002 per square foot for the additional space, then it's almost half of the price, right? So that is conceptually wise is worth it. And also the other thing to note is that for dual key units, you also see that the PSF is normally higher than the normal 3 bedrooms, normally, generally speaking. And the reason is because they think that for that kind of layout, you can actually rent out the studio and stay in the other. So you're earning rental income on that side, right? So from the very point of view is you will make, in terms of investment, you will make back that amount. So as by renting out the studio or the 1-bedroom right on the other side. So they normally price the PSF higher. So in this case, it's quite an opportunity for you to enter into this 1033 square feet, knowing that actually you're not paying that much of a premium or a higher per square foot for the dual key. The other one that I want to point you towards is looking at how we spot the units to enter, considering the amount of inventory that we have, okay? I'm going to jump a little bit to our business suite. So all Pronex agents have access to it. And today we want to look at Bloomsbury. So Bloomsbury right now, if you talk about the 2 bedrooms over here, the 646 square feet, 678 square feet, and 698 square feet, you see that these are all the units available. Here you can also see what has been transacted around the 2 bedrooms range. That means from the lowest to the highest, what has been already transacted, and then based on the size, what are the quantum that you're looking at, right? So in this case, you see that 646 square feet, the average is around 1.6 million. The bigger ones around 1.7, almost 1.8 million, right? Today, if you're looking at a 646 square feet or a 678 square feet and you want to choose between the two, so if you see that the cheapest 648 square feet one on the 3rd floor is at 1.644, but for the 646 one, the cheapest unit is at 1.673, right? It's already higher than what you see at the 648 range. And then if you look at the pricing over here on this size mix per quantum, you know that exactly what has been transacted already. And if you look at the 6781, you see that you are actually entering at the lower bound, even below average, right? So it doesn't make sense for you to go for the 646 at almost above average price or average pricing when you can get something at a super lower bound on the 678 square feet. So of course the facing, the layout, all that matters as well, but being able to spot where you are at coming in as an investor today, you want to know that ideally you are kind of entering in a lower bound, even though that your units already have been transacted. So this one example, look at entry price, okay? So today, especially if you're looking at a brand new development today, a lot of the developments are going to be in CCR. So just to give an overview of where we are in the CCR region, and is the pricing attractive in the CCR region today? So if you're looking at 3 bedroom, One Marina Gardens, you can get a 3 bedroom at about 2.8 million. Robertson Opus, I think you will be looking at around 3 million, yes. So we already have the estimated kind of prices out, and I'll be doing a 1-hour project analysis on Robertson Outpost, and you can look out for that video as well. But the 3 bedrooms, yes, the smallest one at 926 square feet will be launching at around 3 million. Collective at 1 Sophia and Oriel, they are also in the 2.7, 2.8 million range. You can get a decent 3 bedroom. But just looking outskirts a little bit in your rest of Central Core region, you see Emerald of Katong, Tembusu Grand, Ori, Incheon Park. They have already transacted at a relatively high price as well, almost matching, like especially these 3, they're almost matching these prices really, right? So from a perspective point of view, you see that actually I can be able to live in the city for outside city kind of price. There are 2 things. Why is there a perception that nobody wants to live in the city, right? Because there is a mindset that the city is always more expensive, and 2, the sizes there are always the biggest, right? So today we have an opportunity to see where the other launches are coming along. There are 4 more plots in River Valley and 1 at Robertson Outpost, which is at Robertson Walk, that's coming up, and there is a high chance that they will be pricing the units very competitively, which makes it cheaper to be entering the city today, right? So today, if we're not talking about requirements for school, we're not talking about family requirements, but just being able to live in the city, suddenly it feels a bit more affordable right now. From where my analysis is going, I think it will be something to look out for, because the pricing will be relatively attractive to make it such that people will want to live in the city. Also, takeaways here, right? When we talk about layout, entry price, what am I paying? Is my project more superior than others? All these are the main factors where you want to think about, right? Of course, supply is one, and then demand in the area, what the demand in the area is looking out for. How much am I paying as compared to my neighbors? Is my project more superior than others? Especially if you're looking at River Valley this year, there are 4 plots very close to each other, all surrounding the MRT station. So how do you know that you're waiting for the right project, or you don't know whether you want to enter the first one that comes, or you want to wait for the others? But when you wait for the others, there is a bit of risk in terms of like pricing also, right? So I'll explain that in my next few videos coming up. Take a look at my channel and also see what are the options and what are the concepts that you can learn from here to help you gain some clarity on what to buy this year, okay? And then of course, layout is one. So I hope that this video is helpful. This is my contact number, my social media on Instagram. You can also pause this video to WhatsApp me directly if you have any other questions, especially if you're looking at entering the market this year, whether resale is a right choice, or is going for new still better. These are the questions that I'll be answering in my upcoming videos as well. Feel free to look out for them, or you can also go to the channel link and go through all the videos. Okay, so I hope that this is helpful. I'll see you in the next one. Bye!